Bitcoin has just taken out a new all-time high after a near vertical fragile pump. Is it now ready for further sustainable upside, or is the low to mid-20s still in the cards? But most importantly, how the hell can we know? Whether this fragile pump in Bitcoin is the beginning of a sustainable bull trend or just a vicious mean for the bears to severely punish the moonboys and perma bulls is too early to tell. Yet with the aid of some complex technical combinations, we can soon tell which way it's heading. What I'm about to present to you in this episode is deep level stuff that you won't find anywhere else on the entire internet, for we look at the complete picture rather than on individual jigsaw pieces. This shit is difficult, and it's the sole reason why our Bitcoin episodes are not more frequent than they are. For this reason, if you appreciate the content I'm about to share, then please return the favor by hitting the like and subscribe buttons. Before diving into the challenger depths, please remember that nothing of what I say constitutes financial advice. I'm merely sharing my own thoughts and conclusions only. In this sense, regard this episode as educational and as a way to get fresh perspectives on your own analysis. Let's now move on to Bitcoin and see what peculiar technical fishes that lurk about at the bottom of the chart ocean. As the custom calls for, we'll start off with the bad news, the bearish case. In this recent episode, I declared that a nice bull run would be in store if this support zone were to hold up, and that we will then even likely see a new all-time high. Now that's precisely what's happened, although despite my being correct in this assessment, I still decided early on to not partake in it, and there are two main reasons for this. First of all, it did show quite a bit of technical weakness down there. Not only did it spike through it, but each of the three tests on the daily chart occurred at the very root of this support zone. And this was like toes dangling down from the living room ceiling, and equally so did each of these sell-off stabs come at high volume. And after that, as the price proceeded up, it again did so at unconvincing volume. This made each resistance zone a likely reversal at which the price could easily waterfall back down again. I did not anticipate it to move like this, for as we can see, this rise is nothing but a very steep and aggressive rising wedge, one rarely seen before. And rising wedges like these tend to end in price correction tears. Now, our beloved zigzag theory is entirely nullified, as the B wave must not under any circumstances surpass the rarely used 854 fib. So if Bitcoin were to still be in a correctional mode, we're rather looking at a flat correction, in this case a running flat or an expanding flat, as the B wave has taken out the starting point of the A wave. And this is something we brought up on a few occasions way back in the summer as an option to look out for. And the way Bitcoin has played out on multiple levels thus far increases the probability of a flat in play. So why then is that? The major red flag is the aforementioned declining trading volumes amidst the entirety of this prospect B wave. For this right here comes with a textbook checkmark for what we're looking for in counter trend correction, such as a B wave. In this sense, the real danger lies in the fragility that weak volumes automatically come with. For whenever it takes little effort to push the price up, it equally takes little effort to plunge it right back down again. But even more so, does this here look sustainable to you? Look what has happened whenever Bitcoin has had abnormally steep price inclines lately. Minus 55% in 2 months, minus 25% in 15 days, and now we have an even steeper incline. Note also how the initial pump from late July until early September moved Bitcoin by 80%, whereas the second one, as of producing this, has peaked at a profit of 70%. Do you notice something here, as in a technical clue? I'll give you a second to meditate on it. Now here's the spoiler, so beware. If this here were to be a flat B wave, we know it's made up by an ABC move in itself, and per classical technical analysis, the A wave and the C wave tend to be of equal measure, at least statistically, just like the September A and C waves were of equal impact. This does leave some leeway into the early 70,000s, although I'd not place any bets on that actually happening for all the technical reasons that we won't get into now. And if it were to, then come what may. This, however, leaves us with the tricky task of properly labeling the A wave. It can be done, I've talked it through with some renowned Elliott wave theorists, and that's all we need to know from now. In this sense, if we were to be in for a flat, then we're looking at a final 5-wave impulse to complete the C wave. Another key reason why we in fact could be in for a nasty flat is the sentiment. As of producing this episode, the Bitcoin Fear and Greed Index stands at a whopping 84. And this is right at the all-time high. People in general, as in retail investors, are a bit too confident at the moment that Bitcoin will proceed higher without a fight. All over social media you will see people confidently shouting for 6-figure Bitcoins. The difference between today and late December last year, when Bitcoin zeroed in on its $19,600 all-time high, is that back then people were skeptical, myself included, to the fact that Bitcoin would just sail through it. Today, it's the exact opposite. And knowing the market well and its masochistic tendencies, this here is like leading the unsuspecting lamb right to the jaws of the psychopathic lion. And equally so, upon approaching any historical all-time high, the trading volumes have notably increased. But that didn't happen this time, and that alone speaks in favor of further painful downside to come in the shape of a flat. And mostly so because people won't see it coming. This on its own, however, doesn't mean it will ultimately trigger the C wave of our possible flat. For whether Bitcoin is in for another soul-wrecking drop of 40 to 60% or a rocket trip towards 6 figures, it must correct in one way or another. Either we see a time-based correction or we see a price correction. So let's then move on to dissect those two scenarios and how we can identify which one is gonna play out. Statistically speaking, this rising wedge should amount to a price-based correction, yet that's not a given. So let's now go through the two different bullish scenarios and what they in turn entail. The first one is for Bitcoin to correct with time, just like it did from late May to late July. In such case, we're in for some sort of a sideways looking range or continuation formation in the shape of a triangle, flag, or what have you. If that were to take place at or above this highest support level thus far, it would be immensely bullish. But not only that, it would likely mean it's alt season. To those of you who subscribe to AUGERE, you may be well familiar with my extensive analysis on the subject and how I position myself heavily in Cardano. To briefly sum it up, Cardano is looking technically interesting on its own. It has also underperformed to that of Bitcoin by almost 50% at most since early September, and while on the Cardano versus Bitcoin chart, as in ADA versus BTC, it is trading right at technical support and has just broken out of a long steep technical resistance. When presented like this, it may sound rather simple and straightforward, but just as the analysis in the recent Bitcoin episode, these things are complex and take a lot of time to identify, make sense of, organize, and distill. The core reason why sideways movements of sorts are required in Bitcoin for an alt season to flourish is rather straightforward. Apart from individual days and more importantly the final stages after a parabolic run, you won't see Bitcoin plunge or trend steadily downwards whilst Ethereum or Cardano rally. Whenever Bitcoin falls, it tends to bring everything else down with it. Think of it like a traffic light. You can have red and yellow or green and yellow at the same time, but you cannot have red and green simultaneously on the same set of light. And the same principle applies to Bitcoin versus altcoins. If Bitcoin has a yellow light and hence proceeds sideways, it can easily give the green lights to alts. And as long as Bitcoin continues sideways, alts might very well have their moment to shine. And for as long as this key supporting Cardano versus Bitcoin holds up, I'll stay in it. We're talking the horizontal support level, the EMA 50 on the weekly, and not taking out a new lower low throughout this year-long bull trend. And this is where things get truly beautiful, so listen carefully. If this cluster of supports were to break and stay below, what does that tell us? Well, it tells us that Cardano will continue to underperform versus that of Bitcoin. And in such case, we're likely talking by quite a lot, as you can see. Now, given Bitcoin's hasty rush, it's rather safe to assume it won't just proceed towards six figures right away. This naturally follows that if Cardano were to continue to vastly underperform versus Bitcoin's spot price, then it's highly likely due to Bitcoin itself plunging. By this token, a break below this technical support level will likely indicate that a flat correction is in play, one that will take us far down. And this is the very core of this episode. This is in fact so important, I'm gonna repeat it once again. A break below this technical support level in Cardano versus Bitcoin will likely indicate that a flat correction in Bitcoin is in play. What about then if Bitcoin were to correct by 10 to 25% from its new all-time high? Wouldn't that bring Cardano's internal strength to Bitcoin past down that support cluster? No, it most likely wouldn't. For if Bitcoin were to correct in a bullish preparational fashion, as in merely taking a deep breath before being ready to proceed higher, then that tells us things would be inherently bullish, whether people are aware of it or not. In such case, if Bitcoin were to correct down to this level, we could expect Cardano to retest its strong horizontal support, which itself coincides with the daily EMA 200. And as you can see, there's a big difference in performance if it were to come down to that. Hence, if Bitcoin drops yet without Cardano versus Bitcoin dropping below its technical support cluster, it's all we need to know that Bitcoin's preparing for a new, steady rally up towards those sought after six figures. So that on that, let's now move on to the second bull scenario, a price-based correction. Now, if we connect the absolute summer bottom with the recent one, we get a diagonal trend line, one of healthy proportions. This line in turn neatly aligns with the EMA 200 on the daily, and given a normal slow price retracement, this second support zone is the one to keep our eyes on. And this level matches the early September pivot high, which on its own constitutes technical support. Hence, as we can see, this support zone between roughly $51,000 and $53,000 is one of prime interest. As long as Bitcoin can stay above it, and as long as the Cardano versus Bitcoin chart remains bullish, we have all the reasons to be optimistic. This is equally so the place to enter longs at minimum risk. If Bitcoin's bullish and reverses, we get in at an absolute low. If it isn't, we get out at an absolute minimum risk. Such case would much resemble that of early September that we once again discussed in full in this episode right here. Moreover, if all this here were to be of a bullish nature, then we can easily tell that this here is the end of a 5-wave count. Now, if this holds true, then this in turn would account for a bigger ABC correction to follow. And if we draw a fib retracement, we quickly see that based on Bitcoin's current bull trap of an all-time high, the second support perfectly aligns with the 382. And to those of you who may remember, the 382 is the most bullish one of them all. For this reason, there's a lot at stake here. The beautiful part, however, and what truly sets this channel apart from the rest, is that we don't need to rely solely on guesswork if or when Bitcoin were to reach this zone. For we can apply the comparative technicals with Cardano and Ethereum to understand whether it's in fact a bullish retracement or just a big fat flat correction in play. That was all for now. Thank you and goodbye.